Welcome back. It's time now to take a look at the top business stories. Dubai to lead development of Islamic finance into Europe. Survey reveals 80% of executives see GCC with the most growth opportunity. And more UAE consumers are shopping online. The GCC markets, they ended mixed today, as did the UAE bourses. The DFM lost 0.5% to close at 1,534 points. In the property sector, Emaar Properties fell by nearly 2% and Arab Tech was down 1.25%. Emirates NBD jumped 1%, while Dubai Islamic Bank was down over 1.5%. DP World was up over 1.5%. 109 million shares were traded, valued at 155 million dirhams. And over in the capital, the ADX rose 1% to close at 2,586 points. The banking sector posted gains as Abu Dhabi Commercial Bank rose 0.5% and Abu Dhabi Islamic Bank gained over 2%. The property sector also moved upwards as Alder Properties rose 1.25% and Suru Real Estate was up 1.5%. Taka rose nearly 3% and Etisalat jumped 2.5%. 127 million shares were traded, valued at 150 million dirhams. And now to the GCC markets, which reversed some of yesterday's losses. And coming up now, let's take a look at various currencies exchanged into dirhams, followed by the price of oil and a selection of commodities. And for detailed market analysis, we are now joined by Anil Sachdev, head of DGCX operations at ACM Middle East. Welcome to the show, Anil.
It's my pleasure to be here.
Moody's cut Egypt's rating by one notch to Ba2 today, saying that the outlook for the largest economy in North Africa was negative, due, of course, to the ongoing riots in the country. The stock markets were shut down last week after the market crashed 16%. And this has also reduced the risk for appetite for emerging market stocks in general, as fears spread that the political unrest could also spill over across the entire MENA region. What market reaction are we seeing at the moment? And how's the MSCI Emerging Market Index, of which Egypt is a part, taking all this?
Emerging markets from Southeast Asia to China to India were all in the red after the crisis in Egypt, where there are concerns that this could spill over into the other Middle Eastern nations, which could disrupt the oil supplies to the world economy. And also that risk appetite is growing stronger with the US dollar, Japanese yen, Swiss franc and gold all moving stronger across the board. We saw that Egypt was due to auction 4 billion Egyptian pounds of debt this week, which has been put off as markets have been closed and banks remain closed due to security issues. And the bank said that the banks would open only after scrutinizing the security issues. And there are concerns that there could be a large outflow of funds once markets open, as investors look to pull out their money from the markets looking at the current political scenario.
And Neil, the protests in Egypt raised fears that violence and political unrest could also spread towards oil exporting countries. How are the oil markets reacting to the crisis in North Africa?
We are expecting the oil prices to remain high after there are concerns over oil disruptions from the Middle Eastern nations, as there are concerns of the crisis spreading to the Middle Eastern countries. There was a slight respite in oil prices where it fell to 89.30 levels from the high of 90.87 after the oil prices moved about 4.3% on Friday, which was the largest rise since September 2009. We are expecting the prices to remain on the lower side, as there are analysts saying that the crisis could not spread to the Middle Eastern nations as they're more affluent and more stable, and that Saudi minister said that the production levels could rise if supplies are disrupted. And we are expecting to see the oil prices between 89 to 90 levels unless the crisis moves towards the Middle Eastern countries and oil supply is disrupted, where we could see prices moving to 92 levels also.
We have the world's largest company releasing its figures today, that's ExxonMobil, plus we will have US personal spending and income data out today, which both are expected to show growth. What are your expectations, Anil, for the US trading day lying ahead?
We are expecting the markets to be in the negative following the Egyptian crisis, even as earnings report could show positive movement and the economic data to be positive. On Friday, we have non-farm payroll data, which would be important for the job sector, where we could see some sort of movement in the US stock futures on the upside. Despite positive outlook for the economic calendar, we still expect the markets to remain on the lower side as risk appetite increases and the dollar strengthens across the board.
Great, thanks for your time, Anil. And now to our top stories. Officials from Dubai Exports, an agency within the Dubai Department of Economic Development, says the country's financial services industry is leading the way for the development of Islamic finance products to Europe. The CEO of Dubai Exports, that's Saeed Al-Awadi, said that the company has carried out 2 successful trade missions in the Islamic finance services, which have linked his firms with opportunities in foreign markets. Al-Awadi hopes to export Dubai's expertise in Islamic finance to various parts of the world with the help of some of the country's homegrown financial institutions, which are specialized in Islamic finance. A growing Islamic population across the world has driven the rise of these financial services, and Dubai's experience will help partner up with the market in Europe. A recent survey presented at the Dubai School of Government reveals that the level of executive confidence here in the UAE has risen by 30%. Also, the survey shows that 80% of executive respondents see the GCC countries having the highest growth opportunity, and all are an area of priority for new investments. A key issue as to why confidence rose was that the government stepped up education and labor reforms, as well as helped improve competitiveness. Also, most executives were satisfied with the government's response to the current economic challenges. Executives in both the UAE and in Saudi Arabia cite restrictive labor regulations and limited access to financing as the biggest hurdles to doing business. And it looks as though more UAE consumers are turning towards online shopping. A recent survey conducted by MasterCard reveals that 42% of respondents in the UAE are web shopping. That's a plus of 29% compared to the previous year. 70% of all web users plan to spend money online in the next 6 months. Experts attribute this to the growing number of internet users in the UAE, the launch of new regional online shopping websites, as well as increased security measures for payment transactions. Although there are still many concerns when it comes to security, MasterCard revealed that 45% of those interviewed still feel insecure when shopping online due to the risks of credit card fraud. And in our fast financial news, Abu Dhabi Airport recorded 582 million dirhams in sales for 2010. That's a 15% rise from the previous year. Electronics, cosmetics, and luxury goods saw the highest increase. Airport officials say this growth is due to the rise of various sporting events such as the Formula One race in the capital. UAE company Dana Gas recorded an 80% profit rise for 2010. The company's net income rose to 150 million dirhams, up from 88 million in the previous year. Higher oil prices and increased volumes from Egypt and Kurdistan were a main factor behind this boost. Saudi Arabian investment firm Kingdom Holding, chaired by Prince Alawid, has proposed buying Kuwaiti telecom operator Zain's entire Saudi business. This comes as positive news for UAE-based operator Etisalat, which wants to take over a majority stake in Zain. For Etisalat to be allowed to buy the 46% stake, the company must sell its business in Saudi due to regulatory reasons. And after the break, Laura Buckwell speaks to Nassif Kayed from the Mohammed bin Rashid Center of Cultural Understanding, so stay tuned.